Quick video looking at the Dow Jones as well as gold and silver from the exact same time frame, 400 days, at least from the Dow time frame, going back to early April of 2011. I want to focus on some things I don't talk about, the current retracement, which easily is more understood that from the low to the high, where it is now is 81.5% of the movement. That's what the actual current level would be. I want to look at that for each of the three, as well as how it's done from these three things. I don't talk about these things on the side, but they're interesting stats, actually, which is how they've done over, well, the last 100 in this case, how it's done from the low, and how it's done from the high as far as percentage moves are concerned. So with the Dow, it's retraced 81.5% of its movement. It has moved up about 25% from the lows, down about 5 from the high, and up about 4.5 from in here. So those would be the stats. We're seeing a big down day today as well, which is, I'll just say, interesting to say the least. Because if you look at it on this chart, I don't see any major move here. I mean, we've had pretty much the same move. There's a bunch of tiny moves here, some massive moves here, but nothing to see a big move. It's just that it's all happened in one day, and this is a 4-day chart. There was an up day yesterday. All those gains have been erased. And now let's look at this 18 average, which I want to focus on with each chart. 18 average, especially breaking downside moves in this one here, because look at the size after it broke down below here. Just one harsh move where it went boom, and then had those big red and green candles. And obviously it used this 18 average band on the correctionary phase well, because it obviously got above it, found support here, support again on multiple occasions as well. When it broke down below here, look at the size of these movements in here with this nice little bear trap to breaking down really 12,350-ish or so, and then it comes into towards the band, up, finds support. Now it's breaking below the band. It's had a resistance test on the 18 average of lows. Will we have it just a failed move? Or I think big candles are coming. That just seems pretty obvious because it's going below this 18 average of lows. That's the easiest way to put it, basically. Now let's move this on to gold. And so those are the stats from before, 81.5, as well as up 25% from the low, pretty much down 5 from the high, and up about 5 from the last 100. So we're going to look at gold in the 96-hour time frame, though. It's pretty much the same as it's the same as, well, 96 hours is the same as 4 days. It's just a major difference because the Dow doesn't trade on holidays, where gold and silver does. Most holidays, anyway. Therefore, on these stats, we have a current retracement of 52.2%, but I do have this low overridden this low. However, we can see that it's a little bit higher. It wouldn't be too much larger, maybe closer to 58%, because it's not that big of a move from here to here. The next one is how much it's up over the last 100 periods, which is, in this case, about 17%, doing better than both the Dow and silver in that time frame. From the low, 12.9, but again, it's from the last 100 periods. So since here, it's up about, I don't know, 18%. And then from the high, 10.5%. As far as the 18 average bands on this one is concerned, huge breakout above here. As things got well above the band, the volatility got higher. Volatile move in here. Look, when these bands crunch in like that, that's volatility extreme, and it usually settles down. You can see in here is where it's really started to settle down. Therefore, when you go above and below the bands, that could be neutrality. In this case here, it was a sustained bear market move, but it still didn't get below this level because the volatility wasn't and anywhere near the area it was before. So a 3 times hit bottom, just like silver, which we're going to see in a bit. And then, of course, now within the 18 band, how it breaks above it with the decisive green size candle, consolidation, and then more upside movement. We've now seen a correctionary phase. We've already had fundamental news on QE Infinity. And an interesting pattern here, because this is like a little hammer formation type deal. And I like how it's had that nice little breakdown, and that can really show you that maybe things are about to get going. I like to see a breakout above, of course, this 18 average of highs, and then you've gotten this 3 times hit high. If you finally put in that nice high or low, which has not happened here or here, then that would really give it some good momentum towards the upside. Now again, if this thing falls down again, you see how you got resistance at the 18 average of highs. You've already had one break below this band, so if that's the same thing, then again we'll be talking about the test of the previous 3 times hit lows. Let's now move this on to silver. We've gotten the stats for the other ones. We're going to look at the 96-hour chart for silver because they trade together. They pretty much share the same brain as well. If an actual metal can have a brain, but they're conscious though. The actual metal itself, being that they're on the periodic table of elements, they're really, in a sense, they're alive to a degree. Anyway, with that being said, the retracement here is 30.6%. Yep. Even though it trades with gold very similar, the smackdowns were pretty harsh. Let's just put it that way. And when you have that situation, you got to say, okay, well, could they do it again? Could they do it again? Well, maybe. Very much so, yes. I know my personal bet within silver is I don't expect the paper manipulation game to be able to hold on. Although I think it could hold on for quite some time longer as far as years are concerned. I don't even know if that will be the case. With that being said, as far as the charts are concerned, in the 18 average of bands, also from the lows, it's up 22%, which is pretty much the same as the Dow, also greater than gold. At least, yeah, from the low. No, the gold was up like 20 higher, I think. Anyway, the last 100 down 19.45%. So both gold and the Dow have been up since early April, with silver down about 19.5%. It's actually down more since about the first week of January 1980 as well. It's an interesting thing. But with that being said, 18 average band. Let's get onto the subject. Big move down here. So this is normal technical analysis by the book. You come after a big move, you find several resistance hit within this, have another move down below here, but this part here, it didn't find resistance. You did have a fake breakout. However, what that did within this band was give it a lower high, basically. And then back in the sustained downtrend. But again, like gold, 3 times hit bottom. And like gold, back to the 3 times hit top. And like gold, you're in this little pattern where you're trying to find support, but you've also broken down a little bit. So it seems as if either that breakdown below, which would take you back down to the 3 times hit bottom, would be in play, or breaking above this should give us a test of this previous high, which seems very likely to be taken out. So that will be today's analysis. Gold and silver generally trade together, although their stats can be off. They can still trade together. Let's look at the movements in here. So you got down, up, down, up, down, up, down, up, down, up. Remember that. Down, up, down, up, down, up. The movements, if you put them side by side, I'm not going to do this today, or probably I don't plan on doing this in the future, that it's very common that if they both go up on the same day, they both go up the same day. Yes, there can be times where one can lose, say, one can lose 1/3%, one can gain 0.5%, that's fine. But you're never going to see gold up over 1% and silver down. That just doesn't occur, very seldomly anyway. Whereas with the Dow and the silver and gold markets, you don't know what's going to happen to gold and silver when they have big down days. When we go back to the Dow 4-day charts, this isn't as quick as a video as I wanted, but we're 10 minutes. So go back to the Dow. When it was having this big shock down below, gold and silver were going higher. And in October of 2008, when the Dow was getting crushed, so was gold and silver. So you can't tell for sure because one's up or down big that the other's going to follow the same direction. So that's the main point that I really wanted to make in this video as well. And I'd like to thank you for tuning in and have yourself a great day. Bye-bye.